Apple is changing further, and this is fundamental. It can be seen from a tiny detail. In the past, the 6 Apple values displayed on its official website were the same on its sub-websites in various countries. But now that has changed. On the US website, the number of Apple values has been increased to 7. In other countries, the items inclusion and diversity have been reduced, and some have even been deleted to 2 items. Change in standards means lowering the demands on yourself itself. This may be due to differences in the governance systems of various countries that led to Apple's operating difficulties. It may also be the company's own limitations, the bottleneck period. There is no doubt that Apple's influence will decline, too, and will usher in its third shift since 1997. Apple itself is in the early stages of decline. I temporarily named this phase sustained time. In this process, it will not accept reality easily and may be able to find a good breakthrough. However, there is no creativity as before. Apple has performed poorly in the face of cars, AI, and robots, but this is what shareholders want to see. From the perspective of a stock market investor, Apple is still on a long-term path to releasing profits, mainly due to the fact that it has built a strong moat in its performance in revenue, costs, profits, free cash flow. Its etc. continues to improve. Investors prefer Apple to accept the status quo as a cash cow rather than take risks. Even from a speculator's perspective, it's positive. Recently, due to news about AI projects, stocks have returned to their previous highs, which is very suitable for short and medium-term price speculation. Entering old age is an appropriate metaphor. This stage is certainly not as creative as the Steve Jobs era, nor is it as capable of expansion as it was in the past decade. But just like the elders in reality, it is easy to make money at this stage. So investors like Apple very much now. As the largest supplier in the AI war, Nvidia gets the best rewards. Shares rose sharply after the results were announced. Naked shorts and convergence arbitrageurs whose positions were stopped were the main reason for the increase. They did the opposite of reality and suffered losses as a result. The stock price rose by more than 9% that day and continued the next day. This is a market short circuit. Connect the future directly to reality. A price-to-earnings ratio of 66 times is too hot. Will it rise further, like Bitcoin at $3,000? It depends on how long the AI war continues and how well its competitors catch up. It also depends on secondary factors, index performance and policy controls. I am not sure about the sustainability of the AI war. We are currently at the climax of the AI war. My gut tells me it will be over soon. The United States government is restricting Nvidia's supply to closed societies. This is actually very detrimental to the company itself. There is a causal relationship between Nvidia and the index. At present, Nvidia, Microsoft, Apple are mainly driving the direction of the index. Not only in the United States, but all over the world, the S&P 500 is being watched by various subjects. Although the index is only a result of the price and trading volume of US companies as constituent stocks, the impact is too great. For modern people, the stock market means the projection of the future onto the present. However, the future is created in the moment. So what's going on right now? Everyone will disagree on this. I think the stock market has entered a state of coupled shock. Looking back at the past, we can see that the stock market has gone through 2 stages. The index supports individual stocks, and individual stocks pull up the index. And now it's coupling oscillations. From the outbreak of the COVID-19 to the start of the Russia-Ukraine war, the stock market has developed a self-reinforcing cycle. At first, there was a bailout, subsidies, and lower interest loans, and then there was a shortage of jobs, strong consumption, and funds for risk aversion or chasing rise in prices and the influx of new immigrants. Under such circumstances, rising inflation speeds up the economy, the exchange rate rises, the United States takes the lead in regaining control over oil prices from OPEC. These boosted the index. Indexes supported individual stocks. The increased buybacks of listed companies, as well as the frequent emergence of various new hotspots such as generative AI, pedestrian robots, etc., have increased the vitality of the entire market. And these large companies have a very large weight in the index, saving the index every time it falls. In a cyclical system, everything makes sense, but it's so difficult to explain that it confuses Wall Street researchers. They have repeatedly issued reports expressing concerns about the market, but reality ignored it and continued to rise. I was bearish on the stock market in 2022 and sold stocks at higher levels. At that time, I was very grateful for what I had done. But when prices recovered, I swallowed my pride and re-entered the markets. Now, almost no one dares to question the bull market, just like Bitcoin. Let me ask the question. I think the stock market will develop a short-term pattern of large swings. Nvidia stock's rise is a divergent pattern. Many experienced people will say that divergence of prices at high market levels means an increase. But more strictly speaking, stocks with divergent patterns can be either rising, falling, or parallel. It's just the way the speakers are placed. My prediction: large cap stocks such as Nvidia will drive index fluctuations. Increased index volatility can disrupt the narrow volatility patterns that investors have become accustomed to, causes the program to be stopped at loss or profit. The index begins to affect individual stocks. The frequency of fluctuations in the entire market began to accelerate and the amplitude deepened. This will discourage long-term investors who pass themselves off as value investments, and their confidence begins to waver and they sell. At the same time, the commodity market, foreign exchange market, and government bond market will become abnormal as a result. This will indirectly affect the relevant stocks. Market changes are highlighted by the media. This is an amplifier. Relevant officials will discuss response strategies and introduce intervention measures. Countries have taken risk-averse actions one after another. All market participants around the world are playing their cards faster and faster. After superposition, everyone's behavior will cause coupling oscillations. They are all doing things to stabilize the market, but just like people who are stuck in a stalemate because of mutual courtesy, or who use their instincts to correct a skidding car or airplane, people respond to market fluctuations in their current state, and the result is coupled shocks. How to cope? Prepare mentally, accepting the potential for increase in volatility and frequency. The index will shift from a daily amplitude of 1% up or down to more than 2%, with a big trend swing every month. Then there is the solution: how to make money in this divergent form. Do the opposite of the pattern with a certain amount of lead. First, draw a midline of the pattern in your mind. When the price is lower than this line, establish a small position. Don't buy too much. A little is enough. And then buy again when the price drops. In order to be faster than the market, taking the initiative to take losses is a good investment strategy. When the price does not fall, hold the position above the midline and sell the corresponding position accordingly. The same is true if you go short first and then go long. This may last from a few months to a few quarters.